Okay, so today I'm going to share with you the 5 trading entry rules you need to know before you even start trading. We're going to talk about that today, coming up next. Now the first entry rule is don't be scared to enter into a trend that has already moved. Now I've seen way too many traders, they would try to sell on an uptrend, they would try to buy on a downtrend. Why is that? Because most people feel that, okay, the price has already gone so low, it couldn't go any lower, so I'll make a buy. And that way, a lot of people, they're trading against the trend. And you know that when you trade against the trend, the probability of you winning is not very high. And yet, most people still do it. I see this in the world of Forex trading, I see this in the world of stocks. Way too many traders, they are more comfortable buying here than buying here. Even though when they're buying here, they know that they're buying the downtrend. So imagine this is your moving average, your long-term moving average. They'll be scared of buying here as compared to here, because you know why? They said that the trend has already gone so far. So if I buy here, the trend might reverse, so I better sell now. You can pick tops and bottoms only when you are more experienced. I've said it many times. If you're a beginner, please don't trade against the trend. And sometimes trading along with the trend means that you would have to enter into a trade where the trend has already gone really far. And that also doesn't mean that you should keep buying on an uptrend without even caring about reversals, because the mistake that a lot of traders make is also they'll buy just because it's an uptrend. They'll sell just because it's a downtrend, without even taking into account that an uptrend can reverse, downtrend can reverse. Spotting trends is really important, okay? But knowing when to exit a trend is also super important. So the second entry rule is don't chase the price. I know it contradicts a little bit of what I talked about just now. If you are supposed to enter 2 hours ago, when you're supposed to enter here, and your target price is supposed to be here, and your stop loss is supposed to be here, assuming that you have a good risk-reward ratio, this is your system, okay, for example. But because you forgot to look at the chart, the price has already went all the way up here. Then you're asking yourself, is it okay to still enter here? To put it simply, go back to the concept, is this risk worth it? You know how top traders roll? We think about how much are we risking. Really obvious, look at that. Entry price to your stop loss level is this wide instead of being this wide, which is your trading plan. And then your target price is only like that. So common sense, is this a good trade to make? The answer is no. And hence, when this kind of thing happens, don't chase the price. There's always another trading day. Give this a miss. Your life is not going to change. You might have less money to buy an extra cup of coffee from Starbucks. That's it. You can still get your coffee from Kopitiam in Singapore. So then the third tip, don't enter based on one signal or one factor, one recommendation. This is a mistake that a lot of beginners make. A trader would just rely on that one person, that one broker, that one smart joker telling them to buy and sell. Then they'll buy and sell. When there are 10 million other things that potentially could tell you to sell, a lot of traders, they just rely on one confirmation. Like, do you even call it a confirmation? Then they get burned, then they be like, candlestick doesn't work, Karen, seriously. Well then, how many factors are you relying on? Oh, just some traders rely on just overbought, oversold signals. Before you enter a trade, you need at least 3 confirmations. Just go watch my seminar video. You need at least 3 confirmations to be safe. If you are really conservative, then you rely on 4, 5, 6, whatever works for you. You know the most dangerous thing in the world is when you made money in your first lucky trade, in your first broker recommendation, in your first signal that you have bought. Because after that, in the second, third, fourth trade, you'll be like, oh my god, you are so damn accurate. I'm gonna over leverage. Beginner's luck is one of the most dangerous things for your trading account. I know that because I've been there. Studies have shown that recommendations by experts are wrong more than half of the time. And you're relying on that. And the problem with that is, when you're wrong, you don't know why you're wrong. And hence, you're not able to learn from it. And then your solution be like, let me go find a better broker, a better expert to follow. That's just not the way to do it. Fourth entry rule, enter based on trading plan. I know this is Karen, what kind of common sense are talking? Easier said than done. A lot of people know that you need to follow your trading plan. A lot of people know how to lose weight, and yet they go out there and buy the magic pill. When most people know that to lose weight, just freaking exercise, eat right. But yet most people don't do it because easier said than done. Do you realize that your most stupid trades are those trades that you made when you are bored, which I have made in the past? A lot of people, when they are bored, they are going to enter on impulse. When you are angry, instead of taking revenge on your husband, on your wife, you take revenge on a... Do you realize that the most stupid trades that you make is because you want to get somewhere fast, you just want to rush it? These are some of the biggest killers of trading accounts. Like, people freaking just can't wait. I already told you, being a trader, it's not about clicking the mouse all the time. Like, if you want to click the mouse, just plug it out of the computer. The truth is that as a trader, 90% of your time is spent preparing to make that trade. 90% of the time is spent in preparation. 10% of the time, in fact 10% is too much. 10% of the time, you are clicking buy and sell. The reason why you're bored to begin with is because you don't know how to occupy yourself when there are no trades. If all else fails, just buy a plane ticket, go to Japan, go to Singapore, live there for 2 days. Just go and attend networking clubs, go to the library, read trading books, go to the bookstore, buy trading books. Entry rule number 5, you need to know when should you use market order, when should you use pending order. These things make a big difference. When should you use buy limit, buy stop, sell limit, sell stop? You need to know that. Now, market order is very useful for those people who want to enter right now. Pending order is very useful for people, especially if they don't have enough time to look at markets. Pending order is especially useful for you to enter at a better price, to enter the price that you want rather than the price that you have now. But of course, the downside of pending order is that you might miss the trade. Understand which market conditions should you use market order, which market conditions should you use pending order, which market conditions should you not enter. So one bonus tip I have for you is know when not to enter. That is also an entry rule. Because way too many people, they just have rules of when should I enter a trade. But in your trading plan, you also need to have rules on when should you not enter a trade. Not knowing when to enter a trade is just as important as knowing when to enter a trade. In fact, the best trades that I've made are those that I did not make. Please make sure that you take care of your entry, because where you enter the market can make a difference between whether you survive or whether you die a good death. So if that, let me know down in the comment section below. What kind of entry rule do you have? Share with me your entry rule, and also share with other people your entry rule. Don't be so selfish. So with that, I'll talk to you in the next episode. Bye.